Hello everyone, it's Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the market insights for Tuesday, February 16th. Well, risk appetite has returned to the FX market this week following China's move to strengthen the yuan. There were also various events on Friday that restored some confidence to the financial sector. Commerzbank announced better than expected earnings, Deutsche Bank announced a buyback of some of its debt, and JP Morgan Chief Executive Jamie Dimon bought $26 million of his company's shares. If this risk-on mode continues, what would be some plausible trades in the FX market? I looked at the correlation of around 20 frequently traded currency pairs with the relative performance of U.S., European, Japanese banks, as well as several risk measures, including the VIX index and some risk measures calculated by various banks. The time period was February of 2009 to the present. The closest correlations were with the relative performance of European banks and the VIX index. Now, the correlations don't show any great surprises. They're pretty much what you would expect. Several of the commodity currencies, such as the Mexican peso, Canadian dollar, and the South African rand, tend to be negatively correlated with risk in the second quadrant in this graph, while yen cross rates tend to be positively correlated with risk. That's the fourth quadrant. That is, the yen tends to weaken, and the Australian dollar, sterling, euro, and New Zealand dollar tend to strengthen during risk-on periods, such as now. This analysis suggests that as long as the financial sector keeps rebounding, several commodity currencies could strengthen, while the yen may weaken further in a mean reverting movement. Traders may want to look at selling the yen against the Australian dollar, sterling, or the euro, or buying the Mexican peso, Australian dollar, or Turkish lira against the dollar. Now, some of the oil-related currencies, such as the Canadian dollar and Mexican peso, have that additional question mark hovering over them. Oil has been recovering slightly over the last day or two, last couple of trading days. If that continues, then these trades may outperform as well. But, of course, the trend in the oil market is subject to change without notice, so please be careful when you're thinking about this. Now, dollar Turkish lira should, in theory, be a good performer under the current risk-on circumstances. However, the geopolitical problems that Turkey is currently embroiled in suggest that the Turkish lira is more likely to depend on domestic factors rather than global risk sentiment. So, personally, I wouldn't recommend it for investors looking to put on a global risk trade either way. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.